Hi guys, welcome back. Today I'll be watching with you this video, the reason I left the insurance industry. I actually do know Christopher personally, so I'm actually quite intrigued as to what he has to share. In that case, a private client of mine has actually mentioned that she watched this video and she was kind of very inspired by some things he mentioned. So let's watch this video together.
Hello everyone, my name is Chris and I'm 50 years old and I'm the CEO of Providend. So I'm born in a family of 6. My father, he was a bus driver and he had 4 kids and I was number 2. And back in those days, the practice almost is that the older children will always go out and work as early as they can to help support the family.
This actually reminded me of a comment I received on this channel. From this video, 7 things that can keep you poor. And this is actually by CK Tan, very good sharing. Poverty is actually caused by personal and structural factors, not just personal. Because in the video, I was narrating a lot of personal factors. But what's accurately mentioned is if there are structural challenges such as family is poor, third world country, politically unstable place, etc., it makes it very difficult for one to break out of poverty, to break out into a higher level of wealth. So in that comment, I actually do mention that I'm personally very grateful of where I come from, my background. It makes it a lot easier to build wealth. And if you're also from a more privileged background, so do always be grateful of where you came from. Because if you have a family to feed, parents to support, then it makes it a lot more difficult for you to make savings and investments.
Well, parents have no more money, right? So I decided to join the army. I spent 6 years as an army officer. It paid well, at least back in those days for a diploma holder. I used the money actually to get a part-time degree in finance during the 6 years when I was in the army.
You know, army is definitely a time whereby there's so much lag time in between things. They can actually do a lot of self-reading and learning. And that's a period I wish I'd done a lot more. Now, right now, if you're in reservist or you're in NS days, do always note that if you put in the extra effort now, you learn something. Down the years, it could bear fruit. So if you want to stand out from your competitors, now is the time to put in that effort. I actually picked up my staff, Cass, and from my conversations with him, I understand how he maximizes his free time. It told me he had a good attitude. And as I always mention, if you want to be successful, the first layer of foundation is good attitude. And if you agree, leave a yes in the comment sections below.
I was actually second rookie in that particular insurance company. I was just really trying to survive. Halfway through that particular year, my bank was left with just $21.59. I always remember that number. I remember I drew out some money from the ATM at Cathay Sydney Leisure, and I saw printed on the thermal paper that I left with $21.59 in the bank account.
Now this $21.59 is actually a failure story that Chris is sharing with us. And as always, when there's failure, there's a lot of learning points. When there's failure, your grit builds, your determination builds. Every successful person has a base whereby they build foundations. They have gone through pain, they've gone through mistakes, they've gone through some agony. And this is Chris's sharing. My own sharing, I've actually failed in my ice cream business. I blew almost all my savings, including my wife's. So that was my foundation to develop, more deeper sense of maturity. And it's something I always share on this channel as well as with my boys.
Bank account. So I was just working very hard. I worked late into the night. I had appendicitis, my appendix burst and I had to be warded. And I had a case to close. It was very crucial that I close it during that period. I asked the doctor, how can I get out as soon as possible after the surgery? And doctor said, you just have to walk around, and to make sure that you get the air out of the body. And so that was what I did. And straight away I went to see the client and I went to do the case.
Okay, I'll pause it right there. I want you to realize something. Chris is actually a very good storyteller, correct? This is the second story. The first story, he had $21.59 in his bank account. Second story, he went to see client even though he had just been discharged from hospital. If you want to be a good leader, be an effective leader, something that I'm also trying to practice myself, you need to understand the power of storytelling. Develop stories. I'm sure Chris has shared this story many times with his own team. I've met Chris before personally. I do know he's a very nice guy. His storytelling method is something we can all adopt, especially when develop leadership skills. Imagine instead that Chris said, I worked so hard until I went to hospital. The impact wouldn't be that good. But in that story, he did mention that he went to hospital, he asked the doctor how he can get out faster. He did every single thing. He walked even though he was in pain, just to clear out the air. So this gives a very vivid impression of things, correct? Stories. This story is relating to hard work. If you want to do well, you need to have hard work. And that's how effective that communication was. I guess it has left an impression with you also.
I was on my regular review with the client and he's a very good client. When I was recommending a product to him, he said this to me, Chris, I like you, right? And each time when you come and you tell me to buy something, I will buy from you. But surely there must come a time whereby I have enough. insurance. Actually, when I heard him saying that, I was actually really guilty. The thing is, he was right. I felt bad, about it.
Actually, this part is very true. I do agree that there will be a point by everybody's insurance needs is fully met. In my opinion, you should build your insurance portfolio until you're 40, 45 perhaps, because there's a time whereby your kids are a bit more mature. You're nearing your tail end of bringing them up already, correct? And having said that, you've also probably taken up all the liabilities. You bought a new house, and 45, after that, you're not likely going to do major loan taking up and stuff. So insurance-wise, usually aim to build it 40 to 45. Anyway, beyond that, there's a tendency to have health problems. It makes it a lot more difficult for insurance. When I was in the insurance industry in my early days as an undergraduate, my bosses at that point of time just shared with me, okay, you can always tap on the next generation and stuff. But I also realized this point also, there'll be a point whereby if you know a friend, know a client, the insurance needs are fully met. There's nothing more that they should buy. And then there's not much further services that you can provide. That's why I've also moved towards doing more on investments. Because for investments, you should build out a portfolio, and that portfolio should be built even after 45. So that's how I've actually evolved my own practice. It's something that I also believe in common with Chris in this mention.
And that this client of mine, which I'm supposed to plan for, instead this guy was actually helping me, not me helping him, right? So actually that set me thinking. Like, I was already not too happy, plus what my client said. And so that was what made me decided to leave the insurance company and start out something on my own.
Okay, I'll pause it right there. Chris has actually left the insurance company. He did not leave the industry, like what the thumbnail has mentioned. So just to clarify things, he's still within the financial advisory industry as a CEO of Providend. Providend is a financial advisory firm. So actually back about 20 years ago, there was this movement to set up independent financial advisory firms. Previously, it was all insurance agencies. But about 20 years ago, there was this act by government that allowed independent advisors. So a lot of firms actually started during a period of time. If I'm not wrong, he created his firm at a point of time to take part in this movement to provide independent financial advisory. And that's where I actually still practice with my current firm.
He said that, we are going to be different and we're going to change the way advice is being given in the industry. The advice is being paid with commissions. Now, not that a commission-based advisor is dishonest, it's just that we cannot run away from the fact that there is an inherent conflict of interest as long as commissions are involved. We started as a fee-only wealth advisory firm from day one. By fee-only, it means that clients pay us a fee, we don't take commissions.
Try to address the white elephant in the room, which is conflict of interest between the buyer, you, as well as the salesperson. Why is there a conflict of interest? And if we think about it, it's likely because there's an information gap between the buyer, you, as well as the salesperson. The salesperson knows a lot more. The salesperson is able to persuade the buyer. And that creates a situation whereby if the buyer is buying something that they do not need, overly committing, then it's to their disadvantage. So as I try to resolve this problem with my own practice, I fall back on something that Steve Jobs once mentioned before. He mentioned that education is the best form of marketing. I kept it close to heart. That is why, as I try to approach this in my practice, I've created a YouTube channel as what you've been following over here. I've also my website, The Astute Parent, because I want to bring up the information gap between the buyer and the seller. When we walk to an Apple store, the salesperson in the Apple store, we do not see them as being misaligned with us simply because we are associated with the brand. We believe that we know what we need and we're happy to enter and take recommendations from the salesperson. As to commissions, inherently when the deal size is bigger, the commissions are bigger. A fee gives a perception that there's no pressure to push the deal size excessively too big. But again, if the customer, you, are properly educated on your budget, you're prepared, you closed up the information gap to something that's reasonable, then there's not too much worry on that portion of things. Conversely, when the deal size is small, when the solution needed for the problem is small, a commission addresses it very well. There's no need to charge a flat fee that's excessively big. I believe to address the problem head on, which is through education. That's why I've created all this content, spent a lot of my marketing efforts generating ideas and educating you as you make your financial decisions.
The industry was very offended, naturally. I think they looked at me like, this guy is a traitor, he's going out there spilling the beans, and all that. So it was tough. In fact, I received a letter in my mailbox cursing my son.
Maybe I can help add more context to this because I know Chris personally. So actually this this portion whereby he created, a lot of industry anger, is probably likely driven by his push for term insurance over whole life insurance. And a lot of ways, I do agree that term insurance should be a biggest component in terms of coverage for anyone's portfolio. If you're interested in my philosophy, look for a link below that touches on why you should only start with a small whole life plan and build term insurance on top of it. That's my solution for best of both worlds. But right now, whole life plans are very different from previous years. Nowadays, whole life plans have a lot more protection components to it. So back in those days, whole life plans were very used for accumulation of wealth and protection. A lot of times, the protection gap for customers was still glaring because it just cost so much to buy a whole life plan to cover for the right amount of coverage. So term plans were not well sold then, but right now, they're very different. Customers, if they're educated, if you've been to my website, you do know about term plans, things I mentioned on their website, ESG Parent also. So term plans are a big component of why I advocate, and it's something that you should be familiar, especially if you're looking to build your own insurance portfolio.
Yes, it was tough financially, but I think what was tough personally for me during that period was that I felt that I could have done a much better job in holding the hands of the clients. Every year, Providend, we have an annual client event, bring the clients together, talking about the markets and talking about the portfolio performance.
There's a few things that I'd like to learn. Annual client event. I think if I can, I try to run one end of this year. Big challenge. I don't know how to do it, but I think it's a nice idea. Something that I can also adopt for my own practice.
And I had to give an explanation of what happened. And I was telling my head of compliance that this is what I'm going to say. I'm going to say that we should have done a much better job. And I remember my head of compliance told me, he said, Chris, if you say that, there is a chance the client might sue you. So I went up anyway, and I just simply apologized to the client, and I said that we could have done a better job. We are sorry, but I'll make sure that this thing will never ever happen again.
But also back to the point of what mistakes he made, back in 2008, because there was a time I was also doing advisory work already. I was still very young. I made this mistake. I was, back at the time, Lehman Brothers collapsed, correct? Citibank was in trouble, so they were in financial distress. Banks were sold down tremendously. I actually advocated for private clients then to buy banking funds because they were so suppressed. But as always, when prices come down, they are for a reason. The companies inside it is not healthy already. So that's why I'm a big advocate of staying away from recovery stocks such as SI, whereby they have bled significant amounts. You're not too sure of recovery. You're much better invested into things that are not damaged because you need to know how to evaluate turnaround stories. And that's my own experience and that's my own maturity investing and advising clients during the 2008 period.
This time round, we were very prepared. 2020 was really the best year for us in terms of holding the clients, in terms of the business, and even in terms of investment performance. So in a way, I'm really glad that we went through 2008 because there are not many advisors or many firms who have managed to go through such a big storm and still survive.
Okay, I'll pause it right there. Now, 2020 was a good year for myself personally, but more importantly for private clients, they actually did well on their portfolios simply because of this. None of them sold out during March 2020 when the pandemic was running rampant. The regular investing kept running, which means most of them actually picked up equities on the cheap. And that actually translated to very good portfolio returns. So in a lot of ways, some things I preach on this channel, which is if you stay the course of investing, if you don't get emotionally swayed, you're able to do well in investing. If not, partner with someone that's experienced. That's something I've always preached on this channel itself.
I think we're very grateful that we had the courage to choose what we believe is the best for our clients. We stood our ground. We believe that this is the best way to give wealth advice, removing the conflict of interest, being multidisciplinary, holistic, comprehensive team approach. And Providend is just a very small player. But what we really hope to be able to do is to at least let people know, what good advice really looks like.
What Chris is mentioning of here, what good advice really looks like. For myself, my interpretation of good advice is to educate customer, the consumer, you. If you know what is good, we are going to have a good relationship, we're going to have a good partnership. And my method of reaching the market with digital methods has brought me a big audience. Right now, our subscriber base is 16,000. When it was a year ago, it's much smaller. And I'd like to also share, because some people have mentioned, hey, it's good, I wish I had a channel as big as yours. But also when the channel is big, the problems are big. The issues are needing to be addressed all the time. And that reminded me of a saying by Jack Ma, which I'd like to share with you. 企业越大，责任越大， 麻烦越大, which translates to when the business becomes bigger, the responsibility becomes bigger, the problems become bigger. So these are some things I see on a day-to-day that you may not know, but running a big channel also has problems. But if you do believe this method is good advice and you want to join me on this journey, look for my links below on the contact us. I will share a bit more with you on a one-to-one basis. And if you like this reaction video, leave a thumbs up. Very grateful for that. And maybe you want to check out our previous reaction videos. You might be interested in those topics also. With that, I'll sign off. Thank you for watching till here. Take care and goodbye.